Everything, as we all know in the universe, follows a cycle, just like you can see here. Now, the financial or economic system is no exemption to this cycle. So you did not click on the wrong video. This is a crypto video, not astro stuff. Now, as we talk about cycles, you might be like, well, money is basically always the same. So where is its own cycle? And to that, I'll tell you that money is never the same. In fact, the value of money also fluctuates. It fluctuates so much that people make a ton of money by exchanging money. Now, this is where the word forex comes from, foreign exchange. So basically, they make a lot of money by trading these little price fluctuations. So today we are going to talk about economic cycles and why investors like you and me, or aspiring investors, know this. Hello and welcome back to the channel. My name is Herve, and it is literally my dedication to bring crypto to the understanding of anybody. On this channel is where I bring research, predictive analysis, and tutorials. If this is the type of content that you are interested in, click the like button, subscribe to the channel with your notifications on so that you do not get to miss any other value-packed video like this one. Now, economies tend to follow patterns that are regular and repeat themselves. These patterns can be called cycles that are comprised of 4 stages. Now, these cycles span from the expansion, the peak, a contraction or recession, we shall come back to that, and the trough. And so you can see that the cycle again begins here. Now, there is one thing that I would like to draw your attention to on this diagram that we see here. You can see that each successive cycle depicts a new trough and a new peak, or a new bottom and a new top. And I think I have spoken about this some time ago in my predictive analysis videos or in my tutorials. This is to say that the bottom of a bear market is usually higher than the bottom of the previous bear market, and the top of a bull market is usually higher than the top of the previous bull market. You can see that from here. So this is the bottom, this is the top. This top is lower than this top right here, and this bottom is lower than this bottom right here. Now, during expansion, GDP growth is accelerating at the rate of 2 to 3%, and inflation is at about 2%. GDP is simply gross domestic product. And at this expansion stage, unemployment is usually at about 4.5%. So you can see that these are really juicy times. Of course, juicy times mean that assets like stocks and crypto will be in a bull market. So basically, this expansion is when we experience bull markets. As the prices of these assets grow exponentially and finally reach their max, this will mean that we are at the peak, and that peak will be here. Then we start to descend. In the contraction or recession stage here, GDP growth falls below 2% and we begin to have massive unemployment, and inflation goes through the roof. This eerily sounds familiar, doesn't it? Now, to put this into proper context, inflation now is at 8.5%. GDP in the US has declined at the rate of 1.4%. These are all good recipes of a recession. Recessions usually last for at least 6 months. Some may last way longer than that, an example of which is the Great Recession that lasted from December 2007 to June 2009. So as we continue down this rabbit hole of recession here, we reach a point called the trough. This trough is usually characterized by very low prices, which of course incentivizes investors to start investing again. And the more the demand for these low priced assets increases, the more the price will start to rise. This will restart this cycle, and then we go again to expansion. So to sum it up, a recession is a period of economic decline or massive contraction in economic activities, usually characterized by a fall in GDP in 2 successive quarters. Now, you must have heard about the word depression, and you don't see that in this chart. That's because a depression is a more severe case of a recession. It is so much severe that during a recession, people fear a depression. So a depression is an aggravated form of a recession, which is characterized by a sustained downturn in economic activity. A recession is mostly a temporal thing. A depression is a longer term thing. An example of this is the Great Depression that lasted for 43 months. 43 months. Now, this is not a call for fear. Do not be alarmed. There has only been one depression in all of history, whereas we have had about 33 recessions in the US since 1854. So, cryptocurrency, as we all know it, is a very tender asset class as compared to its counterparts. Now, by it being young and tender, it is at the extremes of risk. It is needless to say what will happen to crypto if we do go into a depression. Now, if we are in a recession already, as I think we are, then crypto will continue to plummet until we find a bottom on the economic cycle. Thanks so much for watching the video. I hope you did understand what a recession is and what it is all about. Do not forget to like the video and subscribe to the channel if you haven't already, and I will see you in the next video.